Hello. Mic test. Hello. Mic testing. Looks to be working here. Hello guys and welcome to our webinar series. Sorry about the delay. We had a technical issue. The trading view charts were having an issue of loading up, which is very rare. I don't know what caused it, but nevertheless, we are here. Hopefully, you guys can hear me just fine and see the screen share. Just let me know in the live chat. Those of you who are live here right now. I'll just check one more time at my end and see how it's going. Looks to be working fine at my end at least, and the same looks to be the case from the comments of Luis and Manuel. Thank you, Luis, for the actual confirmation, and Ativat and Joe. All right, before wasting without wasting any more time, let's just get started with the very quick introduction, then we'll get into the actual content. So, as you guys already know, my name is Neera. I'm the admin owner of this YouTube channel and this website where I have been publishing my content regarding market analysis using Elliott Wave and advanced price action analysis since quite a long time now. And what we are doing here today is the weekly series of webinars, which we call the Trading Opportunities webinar series. Right, and this is the 157th edition of this webinar series. In the past 155 webinars which are conducted live so far, we have captured a total of 389 trades, and we will discuss what happened with our last discussion, what worked, what didn't work, etc. today in 157th edition. Apart from all this, you can check more of my work, that is my book, by checking Amazon. It's available for instant access via Kindle, and you can also check this link for details on the book. And lastly, there's a track record of my past work, past analysis and webinars, etc. You can just check all that by visiting this link. Right. And here is the video course for those of you completely new. And lastly, those of you interested in following my work later on can request details for the Slack group by selecting this as a subject matter link here. That's it for the introduction. And let's now get started with our actual discussions. So before moving on with the actual chart, what I'll do is I'll discuss or check what happened with the last webinar. So here is the recording from the last webinar, the 156th edition of the Trading Opportunities webinar. And we were discussing the chart of Euro somewhere about here. And let's see what was being said in this last discussion on Euro before we head over and check the live chart right now. Do keep in mind this webinar was conducted on 14th of March 2025. And yes, one more thing. This 157th webinar, which we are conducting live right now, is also the last webinar for this month. Public webinar, I mean. The next webinar will be privately held for Slack group members only. Yes, anyways. So let's see what was being said about Euro. Looks like we are looking for some long trades, I guess. Let's move it forward. It looks like we are looking for some short trades here. Wave 2 support here. Okay, so here is a resistance level above 1.09470. We are looking for longs. And below whatever this level is, 1.084, I think. Yeah, 1.084 something. We are looking for shorts, maybe. I'm just trying to get rough conclusions. Of course, for the real discussion, we will have to go and check the whole thing. We don't have time for all that. Looks like in downside scenario, we are looking at target of 1.0779. Right. So far, that is about all that I can, conclude from this last webinar discussion. Possibility of bullishness. and then bearishness. So what we'll do is now I'll head over to the live chart and see how things progressed. Let's check 14th March, 14th March, 14th March. It looks like it triggered the upside level and went up as well. Sort of did go a little bit upside. I don't know what our target for the upside was. I'll have to check it later on to give it +1 or -1. But it looks like our bullish bias did play out, but it did not really go with the follow through. So the correction seems to be progressing. So what this means is at this point we'll have to look at the chart again and see what's happening in this market. So regardless of what was discussed last time, which I personally am not very clear on at this point, this is our point of reference. Price level is around 1.09472. And from this point of reference, we are seeing a corrective structure. I have currently marked this as a W, X, and Y structure. And let's just see what that is. On the right hand side, you can see this is a W, this is an X, and this is a Y kind of structure we are assuming. Although in this case, I think it's better off we count it as an A down, B up, and C down. One more leg for the C. So this is the structure we are assuming, a corrective structure. A flat structure is the specific name for this correction. And in this flat correction, we have the wave A complete here, we have the wave B complete here, and the possibility of wave C completing over here looks likely at this point in time. Right. So in this particular case, we are interested in figuring out the possibility of C completion, and generally the wave C will have either a diagonal structure or an impulsive structure. In this case, we are assuming, I think we can take this as a, 1 second, let me check. We can take this as a diagonal structure. So as I was saying, in this particular case, we are looking at C, and for a diagonal, we should have overlap between 4 and 1. And in this particular case, we do have that. Let's just call this as 1 and this as 2. And here's your required overlap. The structure is 33333, and here's the overlap. If we draw the trend lines, we can just simply have this structure as something like this. Classical diagonal pattern with an overlap. All the overlap is with the spike here. Anyways, so if that is the count, then we expect this market can go up. Again, keep in mind there are some other variations for this count as well. I'm not really particularly keen on discussing them at this point in time because they aren't really going to benefit us that much. I mean, of course, they can benefit us, but it kind of goes beyond the point of our public discussions and will become a little bit too lengthy. Anyway, the point here in this particular case is for swing long, we want to see the market go above 1.08617. Why? Because at that point, we don't even need that anything above this white trend line. This one is good enough for a long trade, but conservative setup will be to wait for this level to break to the upside, and then we can look for long entries. That's our, let's call it hypothesis 1, suggesting bullishness. And hypothesis 2 would be that the C is still continuing and it is doing something perhaps even completely different than our analysis, in which case it can perhaps go above this trend line. Let's remove this. Above this trend line, it can go and then continue the correction to the downside. So we have two possibilities. One is pointing up, one is pointing a little bit movement to the up and then down. So in both cases, we have minor convergence of hypothesis that suggests that we can look for scalp longs within this zone. Whatever that is on your chart, just check it. I'm using this data feed, so prices will vary a little bit. Right. Hypothesis 2 is suggesting minor up move followed by down. So henceforth, we have a conclusion here. So keep this in your watch list. Perhaps we may get a scalp trade here, perhaps not. It's not really clear, but this will definitely be an interesting one to follow in our Slack group. And before we move any further, let's go over all the live chat comments. Hello, Marco, one of our private Slack group members. Luis, good morning to you. Hi, Emmanuel. one of our regular viewers, Luis and Manuel, and Etivet, private Slack group member. Good evening. And of course, Joe, one of our private Slack group members, as well as Raghu. So, guys, I guess it's all clear till this point. If there is any doubt, you can just push that in the live chat. I'll just simply take a moment here and see if there was anything else worth discussing, perhaps some trade for record keeping purpose. All right, it looks like everything is all clear. Thank you, Joe, for the confirmation. In that case, let's now move ahead with our next chart of CL or crude oil. So let's now, first of all, load up the last discussion, remove all the drawings. So it is on screen the discussion from our last webinar conducted on 14th of this month, last public webinar, I mean, conducted on 14th of this month. And we are checking out what happened with the specifically the chart of crude oil before moving on with the actual live chart. Looks like we are counting sideways structure, assuming it as 4. And then we are saying that, yeah, I remember this one. The idea was that we will look for shorts, but since it was not clear if the fourth wave correction is complete or not, we were looking for only partial entries. That was the main theme. Let's see if anything else was also discussed. Not really. So in that case, let's now head over to the live chart. Here on screen, you have the live chart, and let's first go to 14th. There it is, 14th somewhere here. Never really triggered our downside levels, it seems, and is still inside the range. But now it looks like the range has extended a little bit to the upside. Like for instance, if our range was this much, it has now extended to the upside again. So anyways, the trade setup was not triggered. So let's see what's really happening at this point in time. I guess we have two hypotheses here. Yes, we do have two hypotheses here. I can see it now very clearly. First hypothesis is from this point of reference. This might get a little bit complex. So just let me know if I'm going a little bit fast here. So from this point of reference, price level 80.6, 80.7, let's say 716. We have what we are assuming a possible two scenarios. So let's just go with the first scenario is a possible impulse in the downward direction. I have assumed that this is the first leg, second leg, third leg, and we are possibly inside the fourth, and there will be fifth. This is what we call the impulsive structure in Elliott Wave terminology. It looks like this, and we have replicated it as is on the left-hand side live chart. Now, if that is the case, then we really need to see a move to the downside. But again, we don't have to do much of anything in this case. If it's following the structure, we will see a break below 66.456. And conservative setup would be to look for entry below 65.774, which seems ideal in this case because it is not the main hypothesis anymore. So hypothesis 1 is in this case suggesting downward movement, and wait and watch price levels are mentioned, or expected price levels for possible short entries are here. Right. Let's go through the hypothesis 2 and see what it is saying. In CN color, I am assuming hypothesis 2. It basically suggests that this whole structure is part of some bigger correction going on the left hand side. So there is a correction going on the left hand side is what I'm assuming here, and this whole structure is part of that bigger correction, and in that case it has become a three-way structure, a corrective structure, and which I have assumed as a simple zigzag. So this is the assumption on live chart. Let's check again. Yes, that is the assumption. Nothing with corrections is once the three-wave structure is complete, we see movement in the upward direction again, at least in three waves. So again, the structure is complete here. So this becomes our new point of reference. Price level is around 65.5. And from here on, we want to see at least three-wave structure. In this particular case, it does seem like it has done the bare minimum. Let's analyze this from this point of reference by zooming in a little bit. And as I mentioned, it has to be at least a three-wave structure. So that means it could be an corrective three waves or an impulse with the first three waves, 1, 2, and 3. Whatever the case may be, we have the first leg up already complete here. Second leg is unclear. We may be seeing a continuation of the whole thing in a box range. Let's use a different color for this. So this yellow box range may be expanding a little bit up and still continuing the price action within it, or we don't know if it's already complete here and it will shoot up. So overall, what I can say here is that we are mildly bullish because we have a somewhat of a minor bullish upside movement possibility still remaining, though it is not very strong because, as I said, it has to give three legs to the upside. And if we assume this as the A, this as the B, then C has to just go and pass the high of A. And if this is the A and this is the B, it has already been done. Henceforth, we can say that maybe the C is here and this can just go down. So long story short, we do expect that the C will have a small bit of upward movement still remaining. Other than the possibility of sideways movement first and then up, we can say that we have a mildly bullish possibility here. Second possibility is straight out bearish. Let's just call this with a yellow color. Second possibility, or let's call it H2, is straight out bearish. So what does that help us in getting to? It doesn't help us in anything. It's going to be a kind of a risky market here, and if you aren't really good with your analysis, it probably should stay away from this market is my present opinion. Last thing is you can just enter for scalp long somewhere here near the highs, 68.8. But again, that will be risky as well. That's roughly all about our analysis on CL or crude oil. If you guys have any doubts or questions on this chart, you can always type them in the live chat. I'll take a very small break before we move over to the next chart of gold. If you are clear and understanding all the concepts, you can just type in clear or understood in the comments as well. All right, guys. Thank you, Raghu and Joe, for your confirmations. In that case, we can just simply move ahead. Thank you, Adibet. In that case, we can just move ahead to our next chart. Let's load up. So on screen, we have the discussion from our last webinar on the chart of gold. Let's just see what was being said when the webinar conducted on 14th of this month before moving forward with our next discussion. Oh, sorry, actual chart discussion, I mean. So here we are. Let's just see what I'm saying. Yeah, so we are assuming correction continuation for gold. The price was around 2989, sideways to bearish movement, and then up is what we were expecting. So this was the discussion from our last public webinar. Yeah, again, for those of you who are unaware, we will conduct the last webinar of the month in private for our Slack group members. You can find the details scrolling at the bottom of the screen and the description of the YouTube video, or the LinkedIn description as well if you are on LinkedIn Live. Anyway, so we are assuming sideways correction or correction to continue possibly. And these were the levels 7557. Let's now look at the live chart. So here on screen we have the live chart. 14th, 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 14th March. Where is 14th March? Here it is. Yeah, so 14th March, we were assuming the correction will possibly continue. We were assuming something like this. I would say it pretty much worked out. The correction was a little bit different than expected, but then again, we always know corrections don't always have to play out with the first bias we have in mind. Basically, it means breakout longs is what we are looking for in a correction. And it is what we got. Anyways, it is a very wide movement. I think we had a lot of trades, at least some trades. Scalp shorts, longs. Let me just show you our Slack posts here. So 14th March, booked profits on longs. I did minor longs on 17th. Intermediate update, stop loss, trailed. Booked profits on 19th, 50% positions. Remaining closed in profits as trailing stop loss was hit. Scalp shorts entered today, closed in profits again. That was a very quick trade. Anyways, so a lot of trades on gold. It has given quite a clear and big move. Now what we are interested in is this is the live chart. I just forgot to remove the banner. Trading discussion from last webinar. So anyways, as I was saying, this is the live chart, and here's our private Slack group member at Evite is saying he got 20 points exit too early at 3012. So he was not able to capture the full move, but still got 20 points out of it, which I would say is very significant in a chart like gold. Good work at Evite. So anyways, as I was saying, we were discussing this chart, and our assumption was that there was no assumption. So this has moved quite up from our last discussion. It has done the thing we expected to do, and now we need to observe it from a fresh perspective. So here we are. Let's check what the count is stating. So from this point of reference, we have assumed a B, and a C, although I don't think that is the appropriate placement for B. So that looks more likely. We don't have to check it I have checked it already. Yeah, it works. So what we are assuming here is that we have a wave A here, a B here, and a C leg here. What we call is a classic zigzag kind of structure. Hmm. And we have the C seemingly finished here because it is a strong down move. If there is any more continuation on this counter, it will possibly suggest that this market is not even following this corrective structure, but is itself headed in a downward movement or an impulse to be downside, to be more precise. I just want to check some levels here first. So this was expected support, which was discussed in the private Slack group 3015, and this is the next support at 2990, let's say roughly. And it has kind of managed to stay somewhere in the middle of the zone, which is all right. So from the current perspective, it looks like our bias remains bullish on this counter, right? And trades, I don't have currently any open positions on this counter. The idea is that we want to see the market do something specifically clear, maybe go above this trend line, break the wave, be high, 3038, right? So I guess it's a wait and watch market with the bias being bullish, and these are the two setups. Why is the alert going up? I just moved the alert down and it just went up again. What's happening with TradingView? Anyways, so as I was saying, we are expecting some bullish movement. That's just the bias, and there is no downside count for now because we do have a support which is still untouched. So maybe it will go there, maybe not. But if it does go there, we will have an alert for it right here near the low. Not really much to say or do anything here. Circle A, circle B, circle C. At this point, if you have any doubts, you can just push them in the live chat. Otherwise, we'll just move over to the next chart. If this count, by the way, is working out, then it's worth checking out here that what we are doing on the daily. So we are just making newer and newer lifetime highs, it seems, on the daily. Let's check the weekly. Some high around 841, got back to 25 something, and 1900 something, got back to 1000 something, and then again 2000 tested and then broken. So here's the simple thing which is happening here. What is this? 845, then 2000, and now it's around 3000. So around 1000, around 2000, around 3000 it's heading. You has asked after the C wave, X wave could be formed. Yes, yes. That's why I said this support is still untested, and that's why I did not say that it will just straight out head up. It could still do something like test that support, whatever that level was, 2989, before heading up. Very much possible. All right, I can't see any further doubts. That means everybody is clear so far, which means we now can head over to our next chart. So here on screen we have the chart for S&P's 500. Let's check what was being said in the last webinar on S&P. We were, and by the way, guys, before we move forward with discussion of S&P, I have a quick request that if you are enjoying the content, do not forget to hit the like button and share the content with your friends, colleagues, or social media followers. Like if you are on Twitter or some other social media, then just share this link. And you can also share the live webinar links before the webinar starts as well. That's also good. So again, we still haven't crossed 1000 and forgot 1000. The last webinar did not even cross 500. So if you want me to continue and bring even more content, just keep sharing it. If you aren't already, then what are you doing here? Anyways, that was my quick request. In SPX. So anyways, what we are seeing here is expectation of sideways movement is what I assume is happening. Looks like we had a very lengthy discussion. Okay, so here's the concrete thing which is happening with our discussion in the last webinar on 14th. We were assuming a resistance at 5626 followed by 5700, and that means the market can either reverse from this resistance or this resistance. Then possibly I found multiple hypotheses, or I don't know. Let's just check. Yes, so first assumption is the resistance will be tested and the market will fall after maybe giving some sideways movement. Second is that it will just go up to 5700. So now let's just pause it and check the actual chart. 5626 5700. Here is the live chart right now on screen, and here we are assuming that this market is 14th March. Let's see, where is 14th March. Here's 14th March. The market has actually gone to 5700 literally, and funny thing, it has even taken support resistance at that level, 5700, then tried to break above it 2 times with spikes. So our resistance level has held so far. This is again a +1 trade, keeping track of our trades which we discussed in the last webinar. This brings our tally to 391, including the gold long trades as discussed just before this chart. So now that it has tested 5700 a little bit upside as well, then let's see what is happening afterwards. How is the stream? It looks like the feed has broken up sometimes and the mouse is also breaking up at times. I don't know what's happening. Previously, the feeds used to run smooth. This time I'm observing some lagginess in the sharing. So those of you who are watching live, is the feed running smoothly? And yes, of course, those of you watching later on as a recording, just let me know how the feed was. Is it smooth, rough, in the comment section? Anyways, it's just good enough to explain, I think. So we'll just continue here. We are assuming that fourth is here, possibly. Now, it's fairly simple. If this is the wave 4, expected wave 4, I mean, then we can say that this market can just possibly head over and go down from here, head sideways and then go down. Or second possibility, I'm assuming, is straight out go down. Right, so these are the two possibilities. Let's just change the colors at once. So here are the comments. Let's check. Thank you, Joe. It's good to know you understood it. The lives just got laggy. Is it just now or has it been laggy since the beginning? Joe, can you confirm that? Jeffrey also says it is not smooth. Okay, you can still follow it. That's good enough. I don't know. There is some issue here. Even trading view charts were not loading up when I started the webinar. That's why we got such delay. So it was laggy the whole time. Thank you for that. I'll possibly try to figure out what the issue is. I also observed in the last stream also the recording looked a little bit laggy. It was followable, but not the best experience. Not sure what's happening. The internet seems to be working fine. Anyways, so coming back to our discussion, the possibility of downside is not completely out of the question. So I have currently have two scenarios for bearishness. No need to bother yourselves with any bullish scenario as long as the market remains below 57.15. You can just say that you don't even have to consider anything bullish. So our hypotheses are bearish and bearish. Call it H1, H2, H2, H1, whatever. Sideways to bearish or straight bearish, whatever the case may be. So it is funny for Joe, the webinar became laggy now, but Jeffrey is saying it was laggy since the beginning. I don't know what's going on. So anyways, let's see what's the other question Jeffrey is asking. Do you think we test 5500 or breakthrough? Let's see if I had any further points before I discuss the doubt. Not really. So I'm just trying to figure out a rough target for the downward movement on this counter of S&P's 500, and it looks like the target minimum is 5490. So the low is around 5508. So that answers your question, Jeffrey. If the things or the count that we are assuming does work out, then we expect the market to break below 5500 at once, at least as per this data feed. Keep in mind, different data feeds will have a different, little bit of a different price compared to what we are seeing on screen right now. So yes, that's about it. We are expecting bearishness from two perspectives, and yes, where to enter is the question. This is not going to be a straightforward entry. It can go sideways as well. So the ideal strategy will be to wait for the market to break at least below 5577 and then enter only partial shorts, because the market can continue propagating within the range of this white box. So we can just enter the further longs later on and average out a good position. Possibly a good position, I mean, as the main hypothesis, and we will change our view only once we see a move above 5730. I'll just update in the Slack if there's something like that happens. For now, we don't have to care. I think we do have one counter view though. Yes, it's already there, 1 and A and 2V. And what about the marked level? No need for that. In the case that this market does go up and take out the level of 5720, whatever this high is, then we will assume that this market is possibly propagating up as three-wave correction. We will also assume at that point in time that this market is A down, B up, and C down. So that is the correction this market is following, is our assumption. And that would suggest that this market can now follow up Uh, I'm not really interested because we don't have any confirmation whatsoever, so I don't want to get too involved in the upside scenario. You're welcome, Jeffrey. So there is not much to add here. I'll just wait. If you have any doubts or questions, just push them in the live chat. And as just mentioned, our main bias remains bearish. It will turn to bullish once we see move above 5720 roughly. This is also a market to keep eye out for. It probably will give us some trades in the coming sessions. Looks like everybody is clear on our discussion. So in that case, we'll head over to our last chart here on screen. Now we have the chart of BTC as discussed in our last webinar. No, Raghu, that is not the target. That's just a rough assumption, like the minimum target kind of scenario here. So I've given the minimum target. Of course, it can go further lower. I'll look to update further targets once we see progression. I did not want to discuss them in detail because we haven't seen the downside progression we wanted and haven't taken the entries yet. So that's why the partial discussion. Anyways, hopefully that clears it out. And let's now head over to our next chart. As I was saying, we are discussing the chart of Bitcoin. As of now, we are on 14th. Last week of this discussion, we were assuming that the market is following a WXYXZ. So that is the market is in a sideways movement is what we were assuming. The price level was 84541. The range is around 80,000. Actually 77,000 and the upside range is around 95, I think 77 to 95. And there you have it. The live chart is now on screen in front of you guys. You're welcome, Raghu. And now let's assume or not assume, let's just check what happened since our last discussions, where is 14th of March and it is working out. That was the assumption that this market will remain sideways within this range. And that is how it is. The market has remained sideways within this range. And right now we are looking at A down, B up, C down, and we are within the C, within the wave 3 possibly of the C. So let me show you what I am assuming here by moving this chart a little bit. Squeeze format. So here we are assuming a possible triangle formation. In this triangle formation, we are assuming that we have already completed the first leg called the A wave. And we are currently within the C. As you can see, the C wave itself has 3 waves inside of it. First leg is up, B wave is down, and C leg is up. So within the C is a similar scenario. We are assuming that this is our first leg up perhaps. And then we are assuming that we have a correction here. Which is again getting followed by an upward movement. Now this is to be labeled as C. I am personally assuming that the C is continuing, and I'm assuming that this is the smaller degree A, smaller degree B, and the C itself has 5 waves inside of it. There is no confirmation here. This is just an assumption. We don't have any trade set up with this assumption unless we don't see a break above 86,045. So this is a scenario for what you call scalp long entries above 87,000, let's just say 87,200. Only and only if the market goes above this level can we look for upside movement. And even in that C leg, we have just 2 upside movements remaining or up legs remaining. So long story short, BTC is something to be kept in the watch list and possible long setup, but we don't want to go and involve ourselves very quickly. We want the market to confirm our bias, and that will only be there if we have 87,200 plus level. That is simply and simply only when we can say that this market is possibly going up. And we'll look for long setups there. As far as the targets are concerned, I think it will face resistance here within this range, and I do not think it will cross the 92,700 level. Above that, it would suggest that this market is possibly not following the triangle and doing something else. So basically, we are looking for profit booking levels that will come around somewhere 89, 90,000. So somewhere around 90,000, we can say we have some profit booking incoming. With that being said, we have now discussed all the charts which we discussed in these public webinars. And as I just mentioned, our next webinar will be conducted privately. So if you have any doubts or questions on this chart or any other chart which we discussed so far in this webinar, you can just push that in the live chat, I mean. And of course, as always, important request that if you are enjoying the content while you are live here on YouTube or on LinkedIn, or you are watching this later as a recording, do not forget to hit the like button and much more importantly, share button, so that we can get the relevant views, important views, and reach the right audience. So that's my humble request here. Kindly do your part, and if you want to see these webinars coming in with more content, just continue doing it. For those of you who are in the private Slack group, I'll see you guys next week. For those of you who are joining in the public webinar, I'll see you guys next month, I guess, and on 4th of April, actually. So that's it for this webinar, guys. Thank you for staying till the end, those who did, and you're very welcome, Louis, Raghu, and Joe also. You're welcome, Marco and Joe and Raghu. So that's it for our discussions, guys. And thank you for staying till the end, those of you who did, and those of you who are watching it later as a recording. Do watch it completely. Don't skip ahead or behind. You'll, you know what, lose some vital points, or many vital points, I should say. With that being said, I'll put an end to my words here. And that being said, I'll see you guys in the next one. You're welcome, Raghu, and take care, guys. See you guys in the next one. Bye.